it's been so far more around the discretionary spending, more around travel, hospitality. So we own the second largest OTA, the online travel aggregator, which went IPO about 6 months back. We own that name. We like the fact that it's been steadily gaining market share and essentially is obsessed with profitability, which I think is the kind of DNA that we look for, driven by first generation entrepreneur with essentially the ambition, the agility, and the ability to win out there and make a difference. We've been owning India's largest vacation ownership company, which owns probably 40 to 50 resorts on a pan-India basis, with probably a few thousand keys in their bag, and part of a very, very elite group, a very respected group. So we own that. Third is we've been owning a mid-income home developer out there, and again, we like what they do. We like their focus, and we think clearly that we as Indians are aspiring for larger homes, given that work from home and learn from home and all that are becoming now realities. So we've been owning these kind of businesses. We don't yet own any mall operator. We don't yet own QSRs, because in some of these QSRs, we still see that they are not yet profitable. Competitive intensity is increasing from just having one publicly listed operator out there. We now have close to maybe half a dozen publicly listed QSR operators. So that's basically the challenge that we see. Versus that, we do own one company which went public last December, which essentially is a supplier or a preferred vendor of buns to some of these QSRs. So in a way, we are playing proxies to that opportunity out there, which is again a good mix of the QSR opportunity as well as, of course, the core consumer staples business in terms of the biscuits and breads. So this is essentially the way we've been looking at the entire consumer demographic, with an overlay of unlocking and back to normalcy.
Got it. Final question, Nilesh. And while you did refer to owning some, give reference to the old economy in a way, but what about the large old economy pockets? Steel, which had a fabulous cycle from the lows, or cement, or oil and gas, wherein the common refrain that I see in all reports is that the companies are pricing oil at $40 to a barrel, but actually crude is $70 to a barrel. So the profitability will go up, gas profitability will go up, so on and so forth. What are you doing with this old economy pack, if you're doing anything at all?
So the old economy is a bit of a cyclical kind of a stuff. It's cyclical as well as capital intensive. So we've essentially not been terribly overweight in this segment. But Neeraj, we've been owning a cement company, which we have been trimming in these recent rallies, because we clearly believe that valuations are heady. We have been owning a company called Carborundum Universal, which makes refractories, abrasives, and electromagnetic minerals. But clearly now valuations have turned heady. It's now trading at almost 50 times trailing earnings. So we've essentially chosen to take money off the table, and we've been trimming for a while, but we've now completely exited that position. So I clearly believe that that's in a way a space that we no longer as optimistic or constructive as we were 12 or 18 months back. But if we were to kind of just use the word old economy, I think one segment essentially is going to fire up and start posting significant essentially growth, because again, there exists a pent-up demand out there. So we're getting very, very constructive on both OEMs as well as essentially the auto comps. And of course, there is the new economy kind of overlay to that, which is in the form of EVs. So some of these companies will have a very strong EV strategy, and we would want to participate in that. And then, of course, there will be their preferred vendors through auto component companies, which essentially have a very, very clear-cut EV strategy to partner with these OEMs. And we would want to essentially, in a way, participate in that growth opportunity as well.
So do you bet on eating oats, or do you bet on the oats themselves? Yeah, you believe incumbents stand a chance?
We just bet on growth, earnings, and cash flows. I think the name doesn't matter. Like oats and meals, I think the taste should matter. That's it.